Thank you very much, Mr. Vilpi Sauskas.
More or less.
Yeah, more or less. Okay. Yeah, that's across. With globalization, one of the big challenges is the world coming together and different groups having to pronounce different kinds of names. So more or less is thank you very much. It's a great pleasure for me to be here in your country. I've never been to your country before. I've been in the region, but never to your country before. And especially in my current job in the World Bank, this is a great honor and pleasure for me to be here. This is a country I don't have to tell you. It lies at a strange crossroad of history, strange crossroad of politics and geography. So it's a very vitally positioned country from the global point of view. And in addition, what I had heard, but last evening walking around, I realized it's one of the most beautiful cities that I've been in. I love walking around just in cities, and last evening's experience was marvelous for me. Thank you very much for the invitation and for this opportunity to speak. Before getting into the details, let me also mention to you that from the point of view of the World Bank, this is, for me, important coming here because yours is a country that made a transition just over the last 10 years or so from a country to which the World Bank used to lend money to a country that over the last 7 years has been actually lending to what is the World Bank's IDA program to lend to poor countries around the world. So Lithuania today is a contributor to World Bank's effort. The World Bank collects money on this from the United States, from UK, from all the Eurozone countries to marshal funds to reach out to Sub-Saharan Africa, to South Asia, Latin American countries. And today, from 2007, Lithuania is a part of that global effort of relatively rich countries to contribute to the fight against poverty around the world. So that also makes it a very important transition country for World Bank, your country, because it transited from IBRD borrowing country to a lending country. Now, as far as today's talk goes, I, as your director just told you, it is going to be drawing on different disciplines and related to the World Development Report, which the World Bank is going to produce. You know, I spend most of my time on matters which are just completely economics, to do with fiscal policy, to do with monetary policy, trade, taxation policy, getting those things right. I've been doing that when I was advising the Indian government. I've been doing that as a professor and now at the World Bank. But today I'm going to deviate from that, something which I do with just a small percentage of my time on drivers of economic growth and development which lie outside economics. Usually, if you ask an economist, what is it that makes a country grow fast, develop fast? The answer will be you have to do your fiscal policy correctly. You have to do your monetary policy correctly. The nature of privatization has to be done correctly. So all the answers will be to do with economic policies. But there is growing evidence that how a country performs depends a lot on outside of economics. The nature of society, the nature of political institutions. Is there trust between people? Do people trust one another? Francis Fukuyama wrote that one of the biggest drivers of economic development and growth is trust. Societies that manage to develop trust grow faster. So my talk is entirely going to be today with these non-economic drivers. Let me start with one particular example. The heart of economic growth and development is exchange. In today's world, no one produces all the things that the person needs. You don't produce your own food and clothing and everything. Most people produce one or two things, and then through trade and exchange, you acquire everything else. What leads to trade and exchange? if you read in textbooks of economics, it will say that you need 3 assumptions, and there will be trade and exchange. What are those assumptions? Number 1, people prefer more goods to less goods. In other words, selfishness and a drive to do better has to be there. Number 2, you don't want more and more of the same commodity and product. You want variety. 2 assumptions, and the third assumption is different people or different countries have different strengths and assets. Then they want to exchange. I'm very good at one thing, someone else is very good at something else, we want to trade and exchange. These 3 conditions, if they are true, there will be trade and exchange. In the United States, there have been researchers who did some experiments with rats. So, first of all, rats are fairly greedy. They are continuously scurrying about trying to find more food for themselves. This is taken for granted. The second assumption, that rats like variety. If they have too much of the same good, there is diminishing returns. There were 4 researchers in Texas who ran experiments. This is a very famous paper, and showed that actually rats also, like human beings, like variety. They don't like to have the same good more and more. The value of that good goes down. After that, this is a Swedish economist who reports, Carl Warnerid reports, that some economists wanted to see if rats perform trade and exchange. So what they did was, they got 2 rats, gave one rat all the cheese and another rat all the bread. And now see, rats, all 3 conditions which in textbooks of economics you will be told you need for trade and exchange are satisfied. Rats are greedy, rats like diversity, this is proved, there is a paper on that. And this Swedish economist reports of the experiment where one rat is given all the cheese, another rat is given all the bread, and then they wanted to see whether there will be trade or not. And they discovered that there is no trade. Now, experiment, I would say I know that rats don't perform trade, but some economists are fussy, thank you very much, and did that. What, however, this shows is something very important, and I've written about that. That apart from these economic conditions, people like to have more, law of diminishing marginal utility, initial distribution of assets being lopsided. There are many other assumptions which we don't write down in a textbook, but which are essential for economic functioning to occur smoothly. People use language to do trade. You have to say that this is the price at which I'm offering. The other person will say, no, that's too high. Language is important. But in economics textbooks, we don't write down language is important. Number 2, you have to have a minimal respect for one another's property. If you don't have it hardwired into you, that this is my cheese and that is that person's bread, you will immediately go and rush and try to grab that person's bread, and there will be no formal trade and exchange. So these social values, that this is mine and that is that person's, you need that. And actually, once you begin to think, variety of social and political institutional assumptions have first got to be satisfied before these 3 economic assumptions come into play a role, and trade and exchange takes place. That, in some ways, is central to what I will speak about today, and that is central to the next World Development Report. I want to tell you a little bit about the World Development Report of the World Bank. Just this will do, and if this will take, okay, let me just see. Okay, so these are the 3 topics that I will go through. Let me tell you a little bit about the next World Development Report. The World Development Report 2015 actually comes out in 2014. This we always do with our World Development Reports, like automobile fashions. the car label of the year, and it comes out 1 year earlier. That's the style that the World Bank uses. Yeah, this is the name of the World Development Report that is going to come out. This year it will come out in November 2014. The World Development Report 2015 will come out. This is a very unusual World Development Report. This is called Mind and Mindsets, Insights from Modern Behavioral and Social Sciences for Economic Development. The report is virtually written. Let me give you a bit of a glimpse of what the report is all about. The private sector, big corporations, when they try to sell goods to human beings, they of course know that human beings have a lot of rationality. They like the product to be good, they like the price to be low. But they also know that human beings have psychological quirks. And big corporations all the time make use of the understanding of human psychology, human social preferences to sell better. The crux of this World Development Report is to say that this lesson should be used by governments, by international organizations, when you're trying to battle poverty, when you're trying to promote growth. Yes, the main economic policies are important, but just like the corporation selling a product realizes that human psychology also is very important, we, in promoting development, should recognize that human psychology is very important. Let me give you one quick example from corporate selling. In the United States, if you're going to buy a refrigerator for your home, you go to a fancy refrigerator store. Very often, when you're entering, you'll see some refrigerators which are very fancy, very nice, but price is sky high. So you will like it, the features in it, but the price is so high that most people will say that, no, it's not worth buying this. In fact, there are studies which show that the shop, the store, knows that this refrigerator will never be sold. But seeing it and looking at the price will change your reference point of prices when you go into the store. So when you go into the store, you'll see a similar refrigerator, price much lower than this one, and you will see this, you will think that this is a fantastic price, and you'll be likely to buy this refrigerator which you would not want to buy if you did not see the one which is outside, which is priced very high. This is a tactic of human psychology, changing the reference point before you go into the store so that your sense of price gets changed and you're more likely to buy the product is used by companies. When you buy a variety of products, you'll see the price ends in 99 cents, $99. A short flight to somewhere in Europe, $299 ends in 9. There are lots of studies about, again, human psychology, where the ending in 9 is a strategic use of this. The World Development Report tries to make the point that this is something that we should do in terms of promoting development as well. And I can tell you, even for a country and a government trying to promote policies, good economic policies, if we become aware of the social and psychological dimensions of human functioning, we will do much better. Let me give you, before I go into the details of the World Development Report, let me give you one more example. You know, it is well known, and last evening I was talking to one of your policymakers, and we were conversing about the Norwegian economist, political scientist, Thorstein Veblen, who pointed out that most human beings have a side to them where they like to show off about a variety of things. A standard thing which people like to show off about is money. So he developed the term called conspicuous consumption, where you consume very visibly to the world, not because you care about the consumption, but because you want to tell your neighbors that you can afford to consume this much. In very traditional India, these village landlords, there were huge landlords, they would roll their cigarettes in rupee notes, currency notes, and smoke a cigarette. Not that they liked the smoke that came from the currency, but it was a message to the neighbors that I can afford to roll up currencies and smoke a cigarette, is the message they are giving. That's a part of human nature. If this urge for conspicuous consumption could be directed where you're making a conspicuous consumption, but that is also contributing to society, you would get certain advantages from this. In the United States, one early form of conspicuous consumption was starting your own university. So you put in your huge amount of wealth, you give your name, and say that I'm going to start a university. You are satisfying your self-agenda. The world gets to see that you're starting up a great university. And that contributes to society's development because a university is a very great institution. So if in a society you can direct rich people's conspicuous consumption into activities which are signals their wealth and is also good for society, you can get a lot of benefit out of that conspicuous consumption. Again, a lot of the World Development Report is mainly for poor countries and developing countries. So what the report contains, a lot of it is to do with developing country examples, but examples are galore from all around the world. This one is what I feared. You won't even know what I'm trying to show, let me, actually I'm going to skip this over. You can get color misperception from the surrounding elements of colors. And the misperception is so large that you can't psychologically correct that. And this is too hard to explain on this, what's happening, so I won't do that. But let me tell you, little other illustrations where you will see the importance of human psychology and how the mind is hardwired. Over here, it is surrounding colors that influences your perception of color. But there are other experiences from your personal life that you may have. I can give you one. Every time I find I have to step onto an escalator which is not moving, so the escalator is stationary. When I'm about to step onto the escalator, I find that I tend to stumble. If the escalator is not moving, and I can see it's not moving, but still when I take the first step, I tend to stumble a little bit. And the reason is our minds are attuned to the fact that escalators move. And as soon as you're stepping onto the escalator, your own motion adjusts to the fact that this is moving. And even if you can see it's not moving, you tend to stumble on that because you're not used to it. Just like the opposite used to happen. Our parents and uncles and granduncles, when they would step onto an escalator, they would stumble because they were not used to staircases moving. And now the opposite tends to happen. But I'm coming now to this. These are all examples from the World Development Report. Human choice. You are told in standard economics, you're told that human beings are rational. And if you tell them to choose between A and B, they will always look at what is better for them and make a choice. But psychology shows how you present the choice to people makes a very big difference. So if you tell them that you have to choose between A and B, if you say nothing, I'll give you A. But if you're free to say B, in which case you'll get B. So you're choosing between A and B. If you say nothing, you'll get A. Or do another experiment, say you have to choose between A and B. If you say nothing, I'll give you B. Standard economics will tell you it doesn't make a difference. If you give a person a choice between A and B, the person will choose which is better and make a choice. Organ donation, giving your body parts in the event of an accident. If you ask people, do you want to donate your organ if you die in an accident or not? How the choice is presented makes a huge difference. If you tell people that if you do not say anything, your organ will get donated. Or if you say that if you don't say anything, your organ will not get donated, the choice becomes very different. In Austria, which is here, you can see Austria and Germany, very similar societies. In Austria, donating your body part is the default option. If you say nothing, you donate. In Germany, To donate, you have to exercise that option. And immediately, you find that huge numbers of people donate in Austria and much fewer donate in Germany, just by putting the choice that this is your default option. If you say nothing, this is what you do, you begin to influence human choice in a very big way. So it's not just a question of, do you want A or B, but do you want A or B? If you don't say anything, I'll give you A. If you don't say anything, I'll give you B. You'll manage to make human beings choose differently. These are all strategies, by the way, which the private sector, the corporations, use all the time. We use too little. Another example, this is from a developing country. You put up a little poster in a bus which says, don't just sit as he drives dangerously. Stand up, speak up now. You know, dangerous driving happens probably a bit more in developing countries. Drivers drive very hard and fast. This is a little instruction to passengers, saying that you just put a sticker over there. If your driver is driving dangerously, don't just sit there. Get up and tell the driver. Just having that sticker there causes accidents to go down by 50%, is a study from Kenya. It motivates individuals to get up and actually speak, having that poster over there. We know things like this, these instructions that make a difference. This is not to, I won't exaggerate that all these things do make a difference, as a signal over there. I remember many years ago, when I used to be a student in Delhi University, Indian buses would always have a segment of seats which were marked ladies' seat, only women can sit. But no one respected that. Men would sit over there and women would have to fight to get it. To improve it, then the buses started putting another sign on top of the ladies' seat which would say, please allow ladies to sit on ladies' seat. But even that got ignored. So I'm not exaggerating that these things will always make a difference, but study after study shows that you can begin to make a difference with human behavior by just these kinds of very simple techniques. The report has a whole lot of examples. I can't go into too many because the report is not yet released. But from education, you want people to get educated. You want people to take loans correctly. You can make use of human psychology in a big way. Again, to show you how the private sector very often does take advantage of that. Again, in my very early days as professor, I used to go into an Indian village with students and other professors to look at money lending practices. And you would see this time and again. When villagers are told that, do you want to borrow some money? And the interest rate is given as a monthly interest rate instead of an annual interest rate, people are more prone to borrow money. A very standard lending that used to take place, this is very tragic, in eastern India in this village, was 10% per month, which is a sky-high interest rate. So the moneylender will lend to you, 10% per month is the interest rate, compound interest rate. So if you don't pay back, it compounds. That works out to about 230% per annum interest rates. But most people can't do compounding in their head. If you tell them, I'm going to lend you money for 1 year, 230% interest rate, most people will say, no, I don't want it. If you say, I'm lending you money for 1 year, but it's 10% per month compounding, lots of people will take that money because 10% sounds better than 230%. How you design credit makes a big difference on whether people take it or not. Education, you're trying to reach education to the poor. How you advertise and take it to the poor makes a very big difference, and the World Development Report goes into that also quite a bit. I want to now go into another dimension of the World Development Report, and mix it with some of my own research, which has more of an interface with politics. And I'm guessing that given your institute, this will have some interest. This is to do with, again, social psychology, but interactive psychology. A lot of game theory is an analysis which is this kind of interactive psychology. And that, once you bring that into this framework, you begin to get very interesting insights into human behavior. You know, in dramatic global situations, like the Cuban Missile Crisis of 1962, a lot of it is rational thinking, but a lot of it is also psychology. And a lot of it is thinking, I must think about what you are thinking. A lot of warlike situations is not just being rational, but knowing that the other side is also thinking like you. And knowing that the other side is thinking about what you are thinking. So these thought processes, I think that you think that I think, plays a very critical role. If you don't take into account the other party's thinking, you go wrong in a lot of your economic policy, political policy. So a lot of your thinking is, I think that you think that I think. These reasonings are very complex, but some years ago when Scientific American asked me to write a paper on this subject, I gave one simple example to illustrate how my rationality is important, but my realizing that the other person is also doing calculations is very important. Here is a simple story from India which illustrates this. A hat seller, a man selling hats, was going from one village to another, one town to another town. Halfway through, he felt very sleepy. So he put down all the hats that he was taking and he went off to sleep. When he woke up, he found that all those hats had gone. He was very worried, where are the hats? Then he looked up. Monkeys had come down from the treetop, taken the hats and gone up to the tree. He felt very bad. He's a poor man. By selling hats, he earned his living. What would he do? In desperation and feeling bad, he took off his own hat and flung it on the ground. I don't know if you know, monkeys are very well known for imitating other people's behavior. So immediately from the treetop, they started throwing the hats down. So this man went, collected all the hats and happily went away. 40 years later, his grandson became a hat seller and was going from one town to another. When he felt sleepy, he put down all the hats and went off to sleep. When he woke up, all the hats were gone. What would he do? He's a poor person. He looked up and saw monkeys had taken all the hats up. What will he do? How will he get the hats back? When he suddenly remembered his grandfather's story. So he took his own hat off, flung it on the ground. At this point, only one monkey came down, picked up this hat, went to him, gave him a slap, and said, "You think only you have a grandfather?" It's a trivial story, but it's the heart of a lot of these strategic thinking, putting yourself in the shoes of the other side and not underestimating the other side's reasoning. And a lot of warlike situations, even economic policy situations, you make mistakes unless you do this interactive thinking right. And I just have time for a couple of examples of interactive thinking. Social norms play a very, very major role in deciding how a society will perform. And social norms are a strange blend of interactive thinking, rationality, but they play a role. You know, I stress always in developing countries where people will only talk about fiscal policy and monetary policy to grow. That's not enough. You need all those, but you also need appropriate social norms. Social norms have to do with a lot of strategic thinking. And in many places, you don't need the law. You just need common social norms. A society has to develop common norms. I'll give you very simple examples. One of them is, let me see if I can do it with this. You know, I'm using a little game theoretic structure for this. But don't look at this for a moment. Let me give you the example. Suppose in a country there is no law about which side of the road you drive on, left or right. Each single driver has a choice. I can drive on the left or I can drive on the right. If you manage to have the same norm in society, everybody knows that you drive on the left, or everybody knows that you drive on the right. Actually, for driving on the left or right, you typically don't need the law. Once that norm gets set in society, people begin to do this, and that gives you a certain comfort and uniformity and functioning. Successful societies are societies which have shared common norms. This is a very simple game which illustrates this. Person 1 has to choose between L and R, left and right. Person 2 has to choose between L and R. If both of them choose L, they get $100 each. If both choose R, they get $100 each. And, sorry, I did this very quickly, and I've got a mistake over there, which is a good mental exercise for you. So make this change. Think of this as 0, 0, 0, and 0, 0. Okay? Just please do this for my sake. Convert those into zeros. All it says is that if one chooses L and the other chooses R, you get $0 each. But if both choose L, or if both choose R, it doesn't matter, you will get $100 each. Now you are suddenly in a room with another person and you have to choose L or R. If in this society there is a very common norm, everyone knows that people choose L, drive on the left, then that will help you coordinate, both will choose the same, you will get $100 each. In a society where that norm is not there, you may choose differently and you will end up getting 0 each. So having a common norm plays a role. But there are other norms which need a little bit of sacrifice, which are extremely important for society. To me, this is one of the central features of a society doing well, is trust among human beings. Think of economic exchange. For economic exchanges which are long-term exchange, trust is not good enough. You need the law, you need an enforcement machinery. If you are borrowing money to buy a house and you tell your bank that I will pay back over the next 30 years or 20 years or even 10 years, the bank will not say that I'm trusting you, here is the money, you pay back. You'll be made to sign papers, the country's law and the legal institutions matter. But think of the number of areas in life where we perform exchange and we don't sign a contract. When you get into a taxi and take a taxi to some great distance, you travel, you notch up a bill of $100, the taxi driver has already delivered the product to you. Now you have to pay. If you run away very quickly from the taxi without paying, you violated the contract. In societies where contracts are violated very easily, the taxi system will not operate because taxi drivers will know that after I've delivered the service, the person will run away. You want someone to paint your house, and you tell this person over the next 1 week, you paint my house, at the end of it, I will pay you. Or you do it the other way around. I'm paying you, here is the money. Over the next 10 days, you paint the house. One side of the transaction gets done first and then the other. If that person runs away, either the painter runs away after taking money, or you don't pay after the house is painted, if this is known that in this society people can't trust one another, these transactions will not take place. Home painting will seldom take place. When painting takes place, you will take time off from your work to sit there, to supervise and do that. But once a society develops trust and becomes a trusting society, functioning becomes vastly better. I remember when I first went to the United States, I wanted to have the floor of my house changed. And this was a small town, upstate New York. And a young man came, he looked very decent and trustworthy. And I said, I'm going away to India, my wife and I, we are going away to India for 2 months. Please redo the flooring of the house. The entire thing was a verbal contract, and the key of the house, I gave it to that person. I think I took a bit of an excessive risk in retrospect. But this is a small town with a high amount of trust, and it worked out just perfectly smoothly. Once you look back on life and think of the number of situations where trust plays a role, They're just huge. Societies are made possible by trust and break down by virtue of not having trust. There are studies by Avner Greif, which talks about early Jewish traders who would be selling goods over long distances of miles, who were very worried that if the community's reputation goes down, that you cannot trust them, then businesses won't flourish. So they developed their own enforcement mechanisms that if you cheat someone else, we will punish you because you want the group's reputation as trustworthy to be maintained. Trust plays a role across the society. In India, there is business communities which have some of their own rules which are beyond the state, which tries to make sure that the community's reputation for trust will remain high because that helps them to do business better. I'll take another just 4 or 5 minutes and give you 2 simple examples and see how I actually, up to 10 minutes, is that all right? Okay, let me take that. No, 10 is good enough. So I've got lots of other examples, but let me give you 1 or 2 more. Punctuality, you are for a meeting, differs a lot across societies. I have written a paper on this with a Swedish game theorist, very well-known game theorist, Jörgen Weibull. We've got a paper on punctuality. When we started doing research on punctuality, it was actually great fun doing this research. We discovered that economists have hardly written on this. It's mostly social psychologists have done studies. What causes one society to be more punctual than another? And we reached this very interesting conclusion that it is nothing that is hardwired into human beings. I personally believe, this also is a belief of mine, that human beings are basically very similar. Whether you're looking at a remote village in Africa or some place in Latin America or India, they will of course look different, they will talk differently, culturally over the years they've become different, but the common hardwiring of human beings is very, very similar. And so a lot of our difference of behavior is a behavior where you're responding to the environment. Our paper is all about equilibrium, that in the end, some societies are more punctual than other societies. Punctuality differences are certainly there, but it is to do with equilibrium response to society. Punctuality differences are fascinating studies. For instance, we discovered, people have studied, compared punctuality in South America and punctuality in United States and Canada. And no surprises in that. Much less punctual in South America, much more punctual in United States and in Canada. Then they've also studied, these people, the watches, human beings' watches, how well they are actually timed. Apparently in Brazil, watches have a bit more variation in the time they show than watches in the United States. Over time, it's a reflection of how much seriousness you're giving to the time. When we were doing this research, I was looking for India and Sweden to see the differences. I knew which way the differences would be, but I was looking around whether watches in India give different time or not. I could not find any study on that, but very interestingly, once when I arrived in Delhi, a man walked up to me and asked me what the time is. And his sentence is a very usual way in which in India you ask the time. And I realized that I got the answer to the question I was looking for. He said, "Excuse me, sir, can you tell me the time by your watch?" This is a very Indian expression. And you realize that the watch time dependence is probably there a bit in society. So these differences you find, but we were hypothesizing that these are equilibrium differences. Societies are not innately unpunctual or innately punctual. They change depending on the environment. Actually, I have to say, in India, I find punctuality norms are changing now. As economic growth is taking place, punctuality norms are becoming much stronger with that. And these changes have taken place through society. I'm going to give you one example. This is an historical document I'm reading out, describing a country and how this country totally lacks punctuality. This is an European who was in this country. I'm quoting, Catendijk cited a series of events to illustrate the frustrating slowness of the nation. This nation was very slow. The supplies which he had specifically ordered to arrive at a particular time never arrived on time. One worker showed up once and did not come back again. Kattendyke's frustrations were shared by most foreign engineers in the country. They found themselves puzzled by the work habits of the local people. And the main reason for the puzzlement was the apparent lack of any sense of time. To these foreigners, the locals worked with an indifference to the clock. I read this quotation by purposely not mentioning the name of the country, but the country happens to be Japan. Japan is today the world's most punctual country. This is a description of Japan about 100 years ago. There is this particular Japanese sociologist who's dug up these historical writings about Japan's total lack of punctuality. Somewhere over the 100-year period, Japan changed over from a dramatically unpunctual society to a dramatically punctual society. We don't fully understand how that happened. I don't have it with me here. I have accounts of Koreans and laziness. These are Europeans, British and Americans in 1950s, early 1950s, talking about how these people don't work hard at all. And this nation will never be able to run itself because the people are so innately lazy. Korea is today one of the most hardworking nations in the world. Over a period of 50 years, in this case even less, over a 30-year period, Korea became from a lazy society to one of the most hardworking societies. So these things which you treat as a part of human norm changes quite dramatically over time. What we do not know enough, and that's again the reason why the World Development Report, this World Development Report was chosen by us, is we want to promote thinking about how these norms change, the norms which bring about better society and a better functioning of groups of people. What is it that leads people to change their behavior on things which look fundamental, like punctuality and hard work, and changes one society over time to begin to look very different? If we understood some of these levers of society, we would be able to work on them and get people to behave in different ways which are better. This raises one question which I must address, and with that I will stop, is as soon as you're talking of at the national level, at the international level, the World Bank, trying to influence some of these features, there is a bit of a risk of paternalism. I don't know if you've seen this in discourses. Paternalism is one agency trying to act like the father or the mother and teaching the rest to behave in a certain way. There is a worry with that, indeed. And some totalitarian governments have been extremely paternalistic. I'll tell you what is good for you and you have to do that. Of course, we have to guard against that. At the same time, there is no getting away from the fact that paternalism at one level, one instructing another, happens all the time. Corporations are trying to influence your preference. There are writers who are trying to influence your preference. And you have to have a rational discourse of doing that. And there are also in our everyday lives, there are some forms of paternalism which actually some philosophers object to. When you're told that you have to wear a seat belt in a car, there are philosophers who feel that that's objectionable. It's my life. You give me the statistics on accidents and the importance of seatbelt. It should be my decision whether I wear a seatbelt or not. Why should the government have a paternalistic law on this? To that, my only response is paternalism is all over the place. You can get paternalism without discussing the paternalism. Some government comes in and forces you to do things. It's much better to have a rational discourse at the societal level that these are good values. Punctuality is a good value. Trust and trustworthiness is a good value. Have a discussion of that and try to promote this in society for society to do better. If your rich people are doing conspicuous consumption, try to divert their conspicuous consumption from buying big cars and building ever bigger houses and spending more energy to building institutions of learning, education, universities. Yes, these things do involve participating in society's preferences, but we don't have a choice there. We are already beginning to do this, and the World Development Report is a recognition that these things are already happening. A lot of it is happening inadvertently. We should do it with awareness, take this in as a discipline. And so this very, very experimental World Development Report, you will get to see in November. Thank you very much.